Have you ever dreamed of opening your own neighborhood grocery store? That friendly corner shop where everyone knows your name? It's a wonderful dream, but a common question pops up right away. How much money do I actually need to make this happen? Well, you've come to the right place. Today, we're going to break down the real costs of starting a grocery store, from the initial investment to the monthly bills you'll face. Stick with me, and by the end of this video, you'll have a much clearer roadmap for your entrepreneurial journey. Let's dive right into the big question. What's the startup cost? The truth is, there's a huge range. A small independent grocer in a rural area might start with as little as $50,000, while a larger, urban supermarket could require $500,000 or even more. The final number depends heavily on factors like location, store size, and whether you're buying an existing business or starting from scratch. Let's break down the major one-time startup expenses you'll need to budget for. First up is securing your location. This includes a down payment if you're buying the property, or a security deposit and the first month's rent if you're leasing. This can easily be anywhere from $5,000 to $50,000, depending on your market. Next, you have store renovations and fit-out. You'll need to create a functional and inviting space. This means things like flooring, lighting, painting, and creating a layout. Budgeting between $10,000 to $100,000 for this is a realistic starting point. Then comes the most critical part of a grocery store, the equipment. This is a significant investment. You'll need commercial refrigeration units, freezers, shelving, checkout counters with POS systems, shopping carts, and baskets. For a small to medium-sized store, expect to spend between $30,000 and $150,000 on equipment. You can save money by buying used, but be sure to check the quality and warranty. After equipment, you have your initial inventory. You can't open a store with empty shelves. This cost varies wildly based on the size of your store and the variety of products you want to offer. A good starting point is to budget between $20,000 and $100,000 just to get your shelves stocked for opening day. You need a bit of everything: fresh produce, dairy, dry goods, frozen foods, and more. Don't forget the less glamorous but equally important costs. You'll need business licenses and permits to operate legally. This can cost anywhere from a few hundred to a few $1,000s, depending on your local regulations. You'll also need to set up your business legally, perhaps as an LLC, which involves fees. Finally, I strongly recommend setting aside a contingency fund. This is your emergency cash for unexpected costs that will inevitably pop up. A good rule of thumb is to have at least 10 to 20% of your total startup budget in this fund. So let's say you've got the doors open. Congratulations! But the spending doesn't stop there. Now you have recurring monthly expenses to manage. Let's talk about what you'll be paying every single month. Your biggest and most consistent bill will likely be rent or your mortgage payment. This is a fixed cost you can count on. Alongside that, you have utilities: electricity, water, gas, internet, and phone service. Given all the refrigeration and lighting, expect your electricity bill to be substantial. A small store might pay $1,000 a month, while a larger one could see bills of $5,000 or more. Next on the list of monthly bills is payroll. Your employees are the heart of your business, and you need to pay them. This includes wages, payroll taxes, and potentially benefits, like health insurance. This cost depends entirely on how many staff you have and what you pay them. Then there's the constant need to restock your inventory. What you sell, you must replace. This is a variable cost that will fluctuate with your sales volume. Good inventory management is key to controlling this expense and minimizing waste. We're not done yet. You'll also have monthly marketing and advertising costs to keep customers coming in. This could be anything from local flyers and social media ads to a loyalty program. Set aside a consistent budget for this. Insurance is another non-negotiable monthly expense. You'll need general liability insurance, property insurance, and workers' compensation at a minimum. Lastly, you'll have miscellaneous expenses like software subscriptions for your POS and accounting systems, bank fees, cleaning supplies, and repair and maintenance costs. These small things add up, so be sure to track them. Now let's touch on a topic that makes everyone a little nervous: taxes. As a business owner, you'll be responsible for several types of taxes. First, there are sales taxes. You'll collect this from customers on behalf of the government and remit it to them periodically, usually monthly or quarterly. The rate varies by state and locality. Then you have income tax. Your business's profit will be subject to federal and state income taxes. How this is paid depends on your business structure. If you're an LLC or sole proprietor, the profit passes through to your personal tax return. You'll also be responsible for payroll taxes, which we mentioned earlier. This includes your share of Social Security and Medicare taxes for your employees, as well as unemployment taxes. Finally, you might face property taxes if you own your building. It's highly recommended to work with a qualified accountant who specializes in small businesses. They can help you navigate the complexities of tax law, ensure you're compliant, and help you find legal deductions to lower your tax burden. Don't try to handle this all by yourself. Professional help is worth every penny. So you understand the costs. What's the step-by-step plan to get started? First, write a detailed business plan. This is your blueprint. It should include your market analysis, financial projections, and operational plan. This document is essential for securing funding. Second, secure your financing. Whether you're using personal savings, a small business loan from a bank, or finding investors, you need to have the capital lined up. Your business plan will be your most powerful tool here. Third, handle all the legal stuff. Register your business name, choose a legal structure like an LLC, and get a Federal Employer Identification Number, EIN. Fourth, find and secure your location. Lease or buy a space that fits your budget and is in a good spot to attract customers. Then, start the build-out and purchase your equipment. While that's happening, start applying for all the necessary licenses and permits. This can take time, so start early. Step 6 is to find your suppliers. Build relationships with wholesalers, local farmers, and distributors to get the best products at the best prices. Seventh, hire your team. Find friendly, reliable staff who will provide great customer service. Finally, plan a grand opening. Generate buzz in the community. Use social media, local flyers, and maybe even a small event to let everyone know you're open for business. Starting a grocery store is a marathon, not a sprint. Take it one step at a time. Whew, that was a lot of information. Starting a grocery store is a major undertaking with significant financial commitments. But with careful planning, a solid budget, and a passion for serving your community, it is absolutely achievable. The key is to do your homework, understand all the potential costs, and create a realistic plan. Don't get discouraged by the numbers. See them as guideposts on your path to success. Thank you so much for watching today. I hope this breakdown has given you the clarity and confidence to take the next step in your entrepreneurial dream. If you found this video helpful, please give it a thumbs up and consider subscribing to the channel for more content on starting and growing a small business. If you have any questions or want to share your own experiences, please drop a comment below. I love hearing from you all. Until next time, keep planning and keep building.